What is up, gentlemen? Episode 17, Pickers Market Podcast, Gradient Investments, all that fun stuff.
Nice.
Guess who's back?
No. I just don't ever leave anymore.
No, you're a permanent fixture. You're like the microphones. You're just always here.
That's because the couch is in the background.
Yeah. Well, I got back over my bout of the mini plague. I don't know what that was, but it was a lack of fun. And I'm gone for 1 week, and you guys can't, you just start hitting the sell button. Is that how this all worked here?
That's pretty much it. Yeah. That or maybe Binger contributed to that.
Well, that's what. Yeah. See, you replace me with the tall guy, and then all of a sudden the market, collapses on itself. So can we officially call him Bad Luck Binger now, or is that his new title?
Sure. I'm good with that.
Until he reminds me that his title is president.
Yeah.
Like, oh yeah, and yours. Let's go with that. Yeah. Well, good. Let's just jump right in, huh? Because I think we got a lot of things to jump in about.
Yeah.
So let's start right with the hot button. Is that we haven't had official correction yet, but certainly it kind of felt that way, right?
NASDAQ
did hit.
NASDAQ was officially.
And just so people know, what's the official correction?
10% decline.
Yep.
So the S&P 500 never quite got there, at least as of yet. Now I'm not going to sit here at today's recording saying we're out of the woods by any stretch of the imagination, but we certainly did experience a decline. It fell on August 5th, it fell by 3% plus, right?
Yep.
International markets were worse in certain areas, especially one area was we can talk about that, but Japan had a 12% decline, which is woof.
That's a big number, but then the next day they snap back up 10%.
Right, exactly. So you're net 2, but anytime you're down 12, man, you're gonna sweat a little bit from that.
Yeah, but it's one of those things too that you're down 12,
up 10.
You got to get back. What is it, 13.5%?
Yeah, but at least when you're down 12, you don't go cascading. I think that's the bigger issue.
Yeah,
right?
exactly.
So you had it wasn't just a bounce of 2 or 3%. Kind of, oh my goodness, there's a little relief. It was. I think that's fairly
substantial.
Yeah. I guess if we want to get into it, we can later. I don't know if we want to talk about that now.
Well, let's talk about the U.S. here first. Yeah. Let's start out with the good old U.S. of A's correction. So
quite correction. Let's get
not quite correction.
Pullback. Let's go pullback.
Yeah. Pullback that felt like a correction.
A breather.
Let's discuss the whys. Gangl, why don't we start? What was the top one? What was your opinion? What was the top thing?
I think it started last Friday. The jobs number came out. It was a little bit weaker than expected. So when that's weaker, the economy is probably going to get a little weaker. And then that brings into question, what's the Fed doing? And do they need to start cutting rates, and how quickly they need to start cutting rates? So I think that went from, the economy is really rosy to just one data point, one number, jobs number saying it's weaker than expected. Now the Fed's going to have to cut. Not that they have to cut. And just a couple days earlier said they weren't cutting in the end of July meeting. So now it's like, they missed their window to cut. Now, 2 days later, the data came out. They need to cut, and they should have cut 2 days ago. And by the way, they should cut 50 basis points next meeting instead of just 25 is kind of where the market consensus was. So I think that's what kind of spooked the market originally on Friday. So in the U.S.
Tyler, you got anything on that?
Well, I think it also, all of a sudden, we're now having bad news is bad news again, which I think from an investing standpoint is great, because now you can actually anticipate if there is bad news that the market is going to go down, not go up.
Yeah.
But yeah, I would agree. I think people were looking at, I think it was a culmination of a couple of things. That last Thursday, you had the initial claims and continuing claims. I think it was 11 straight weeks of rising numbers. Mm-hmm. So I think that kind of set the stage. And then we had unemployment jump to 4.3. And then you had a weak jobs number, 114,000 versus 175,000 expected. And I think that really, and then you also had the Fed saying that we could cut in September.
Yeah.
Which means, and we've talked about this before, is if the Fed's cutting, it probably means that our economy is weakening.
In all likelihood,
generally speaking, right?
Or our inflation is completely under control. So, but it's, I think, more so. It's
more frequently the cuts come as a result of economic softness.
Yeah. So I think all of a sudden you had that on that Wednesday, or was that Thursday? Wednesday.
Yeah.
Right. Yeah.
Last week.
They all blend together at this point now.
So you had that on Wednesday, then the initial claims, continuing claims Thursday, and then the big jobs number on Friday. And it just like sent it over the edge.
Yeah. Yeah. So,
and then I think the Japan thing.
That's where I actually just going next is that, so, you would think that had jobs report and all that stuff. U.S., Japan took it way worse. Can you guys provide just a little context? I don't want to go too deep into the trade, carry, all the other fun stuff in there, but why are international stocks getting hit along? Why is this a global sell-off rather than just a U.S. sell-off?
Tyler, you're the global guy. Start there. And I'll jump in.
Well, okay. So generally speaking, when you want to borrow money, you want to borrow at the lowest interest rate.
Yeah.
Just on a global scale, right?
No matter where you are.
No matter where you are. Japan still being essentially zero and kind of negative still was the cheapest place to borrow, right?
Yep.
Their central bank, the Bank of Japan, came out and said they were expecting to raise interest rates, which means that cheap debt was no longer going to be as cheap as it was. And then, so what happens is all of a sudden you have people that need to not borrow in Japanese yen anymore from Japan. And what were they buying with that borrowed money? U.S. tech stocks.
Yep.
Right. So all of a sudden you have massive selling on the tech side, covering on the bond side in Japan, and just money flowing out of Japan after that.
Yeah.
Right.
Yeah.
So I think it's as simple as I can kind of break it down.
Yeah. And I think that was actually very good. And I think what I would say is it's weird market stuff.
Yeah.
I think is what I would say more than anything else is that, Japan being down 12% didn't really have a whole heck of a lot to do with issues out there, right?
No.
It was a trade movement that caused that to be much more of an issue over there. But there is kind of, what really kind of cascaded that back to the US, right? Is that Friday, the jobs report comes out in the morning, right?
Mm-hmm.
We didn't really have massive difficulty until it started to cascade back around after the kind of global environment got a hold of it and all that stuff. It just kind of cascaded it back. And I think that goes to my thought in saying, it's always the US catches a cold, the world's going to get sick too, right? Yeah. And so it's not, even when if the US is slowing, especially since I think it's pretty consensus now that we've had the best post-COVID economy, right? For sure. I don't think that's much of an argument at this point anymore. So as a result, if we're the ones that have held up the best and then we start to roll over, everyone else who hasn't done quite as well, does that cascade into difficulty for them as well? And I think that's, again, trading machinations and all the other fun stuff aside, I think that's probably the more concerning part for the global economy is that the U.S. kind of has been the driving force. And if we start slowing, it's not just a U.S. problem, right?
Yep. Yeah, I would agree.
Yeah. So let's talk then again about, it was a jobs, as you said, it was one data point, which we don't tend to trade as aggressively on one data point, but economic trends, let's just talk about them. What are we seeing? Are we slowing? Are we collapsing? What are we watching the most that's going to give us an indication about, obviously everybody's going to be paying attention to economic data now, right? Mm-hmm. So what are we going to watch as saying, yeah, that may have just been one data point, or, hey, we should probably be looking at this maybe getting worse?
I think we're definitely paying attention to company earnings and kind of what their forecasts are. And I do think things are slowing. So far, we're almost to the end of earnings season. I think the rate of companies beating is over 80%, which sounds, again, like a lot, but the normal average is around 75%. So it's slightly above. And some of the other data we're pointing to, we're not beating by as much as we historically have. Mm-hmm. But so, again, I think it's very healthy, but their guidance is getting a little bit more cautious, but it's still growing. So we're not collapsing. Mm-hmm. We're slowing, right? We had a GDP number out, I think, 2 weeks ago, and that was at 2.8%, which expectations were at 1.9. So again, that's upside. So that tells you things are still very healthy. But again, we're slowing. It's normal. All these high rates for the last 18 months are finally starting to kick in. You're starting to see it more on the low-end consumer, which we talked about several times already. They are feeling it. They're starting to feel pinched. You're starting to see some of these consumer names, stocks, get hit fairly significantly. You're down anywhere from 20 to 40, 50% in a matter of several months. Mm-hmm. So I think things are slowing. Those are some of the indicators I'm looking at. But again, I still think we're growing. Yeah. And you're starting to, I think overall earnings season for me has been pretty good. And if you look at the forecast, they're still looking to grow 11% this year, which we're getting halfway through. Next year, they're supposed to be 15. That's actually, I think that's a big number. I think it's way too high.
Yeah, I'm just going to say that. I think that's way too high.
But even if it's 10, that's still a good number, right? So it's like, so I don't see the collapse. I mean, if you're collapsing, you'd be going negative earnings next year, right?
Exactly.
So that's my thoughts.
Yeah. So Tyler, when we talk about, that's very important. Economic data, like what are we going to look at to give us a sense of economic data about trending?
I think number one, jobs.
Yep.
I think inflation. I don't know that many people are going to be really paying attention to it anymore.
Unless it goes the other way,
Unless
right?
it goes
Unless
the
it
other
starts
way.
going back
Like,
up.
If it goes 2.9, great. If it stays at 3, okay.
Yeah.
Right. I don't think anybody really cares at this point, unless if it does go higher.
Yeah. If we
we're
see
back in the
Then
pre-
people will care a lot real fast.
We're back in the pre-COVID era where most people probably didn't even hear about inflation
Right.
on a daily basis or monthly basis. But I think the next jobs report is going to be the most important. Not necessarily unemployment.
Yep.
But I think the actual non-farm payrolls number is
Gotcha.
going to be important, because unemployment rate 4.3. I don't know if we want to talk about this or not, but 4.3 sounds bad after it was supposed to be 4.1,
right,
and 4.1 last month. But if you actually look at what caused it, it was people re-entering the labor force. It wasn't people getting laid off.
Yeah.
So I think the concern about that, not too worried about it. GDP growth, I think, to Keith's point, 2.8%. If you actually look underneath the hood, though, 1% of the 2.8 was from the consumer.
Okay.
So I think that's where people get a little concerned. And what I would look for Q3 GDP, I guess, is what does the consumer contribute to the GDP growth? Because we always talk about the consumer is 70% of our economy.
Yeah.
Mm-hmm.
And if they're contributing less than half of the growth, that means it's coming from somewhere else, like fiscal.
Yeah.
Right. I think government spending was over half of the growth at that point, or some weird inventory stuff that even I don't really pay attention to. So I think looking underneath GDP at the consumer, and then looking at the non-farm payrolls, those are going to be my two big reports that I'll be watching.
I think for me, the one that I'm going to pay more attention to now that I haven't been in a while is retail sales data. I just want to see what the growth rate overall looks like, but also, are we starting to see some pivots, right? Are we spending on different things? Are we buying toilet paper and that kind of stuff and not buying plane tickets anymore? Those are the kinds of things I'm going to pay attention to, because again, our economy runs much better on the things you want to spend on rather than you have to spend on. So if that starts pivoting, where you're seeing, normalization or at least continuing growth in the stuff you have to spend on, but you're seeing pullbacks in the stuff you want to, that would be a flag for me that, okay, there is material change that's probably getting worse, whether it's created by jobs or whether it's created by company layoffs. Obviously, those kind of go in together. It's something I'll pay a little bit more attention to now than maybe I have been here recently, because I'm much more focused on inflation trends. But now I want to make sure that the consumer is actually still spending, even though things are getting, a little less expensive.
When you look at retail sales, are you maybe this is too geeky of a question, but do you care more about retail sales on a real basis or nominal?
Nah, nominal.
Okay.
I look at now. I mean, obviously in an inflationary environment like we had a couple of years ago where it's 9%, you kind of got to take that out, right? Because everything's getting so much more expensive. But in a normalized environment, I'm fine with saying, there's 2 to 3% of this is price increase, right? When I'm looking at companies like a Pepsi or a Coke or something like that, I do look at volume, price mix a ton. I pay a ton of attention to that, because I want to make sure that they're not, the only avenue of them to grow is by just jacking up prices, right? The tobacco guys have been doing that forever, right? Is that their volumes aren't going anywhere, but they just jack up prices. I want to make sure that that's not the only lever that the other guys are pulling. So from a stock perspective, I'll look at both.
Sure.
In a normalized inflation environment, I'm just kind of looking at nominal.
Retail sales, go back a couple of years, it was people were spending on goods, right? And then COVID happened, and coming out of that, people wanted to do things, and it was going to experiences. Now you're starting to see some data points that's starting to slow a little bit again. So it's like, some of these leisure whether it's cruise lines and airlines and hotels, they're starting to see a softening. So the cores themselves haven't been that great this last round. Stocks they were great stocks going up into this quarter, and they've been selling off. So that's something I think there's a changing dynamic that you're talking about as well.
Yeah. So that's probably what I'll pay most attention to. And then, the last thing I wanted to talk about, and this is going to be a little geeky here, is that the GDP stuff that we're talking about, especially 2.8%, that's backward looking, right? GDP now, there's a lot of estimates out there that we'll pay attention to. Now, their accuracy is not perfect by any stretch of the imagination, but you can get a sense of inflection points, and that's something we'll be monitoring, as well as like, what is the intra-quarter stuff look like? Is that getting better, worse? What's driving that kind of stuff as well? I wanted to pivot this to, talking about the correction and just talking about some of the stocks. Is there anything that you've seen out there that just, wow, that doesn't make a lot of sense to me, or something that's like, this has really been hammered and I don't get why? Does anything stick out to you, Gangl?
Yeah, last week was a big week for the mega cap names reporting,
Mm-hmm.
and the two that I thought kind of acted a little different than I would expect it to were Apple reported, and I thought the quarter itself was okay at best, and the stock hung in there.
Yep.
And it's like the stock already had a nice move off the bottom due to the AI anticipation with their phones, and nothing's really coming out yet, and they haven't.
They've delayed it.
They delayed it, and it's like the stock keeps on hanging in there, which kind of surprised me. I thought the quarter itself was relatively disappointing, and the guidance didn't really make any exciting announcement. So I was like, and the stock didn't do much. On the flip side, I thought Amazon reported a fairly decent quarter. The revenues maybe a titch light, but AWS, which is their technology driver of the web services, that was actually at 19% versus 18%. So it was an uptick. I thought that stock would act relatively well, and that stock was down about 10%.
Yeah, it's been it got
so
crushed.
that one I think is on evaluations, it was a little more expensive, but I think that's got a lot better growth profile. That trade surprised me. Those two names are the big ones that I thought Apple should have been down, and I thought Amazon should have been in line for relative to what they have offer going forward anyway.
Yeah, makes sense. Tyler, you see anything?
I have another large cap tech, Microsoft. I mean, they similar to Amazon, but they were the opposite. So they slightly missed. So I think expectations were for 30% growth on Azure, and they were 29.
Yeah,
1%
difference.
5% because of it. Like, is that really that big of a deal?
Right.
I don't think so.
Mm-hmm.
I think the other one we've been talking about, and I understand why the stock is down as much as it was, but I can't fathom how they missed it this badly, and that was Dexcom.
Oh, yeah.
Keith and I have pitched it on Schwab and a number of times.
Yes, we own it several places.
But like I don't understand how you can miss a quarter so poorly. Like, I just can't wrap my head around it. Like they changed up their entire sales force, and now their salespeople have zero relationships with doctors.
Yeah,
that they cover. It's like, is that really a smart thing to do? I don't know. I understand why the stock was down, but I don't understand why they did what they did to make it go down.
Gotcha. And then when the stock was down, it was not just down like 10, 20%. It was down 45% in a day, which for a market cap that size, for a company that's been around, that's got real products and sales, that's a pretty
they
big.
Have real earnings.
You don't see that.
You don't see it very often. So, I mean, it's bounced back some, but it surprised me. And Tyler's right. The magnitude of the miss was rightly deserved for a high multiple stock, but 45% seemed a little extreme.
Yeah. My side,
you?
Healthcare. I just thought it'd be better, to be honest with you. When I think about things like on a correction environment, right, is like, well, what can I rely on? Well, chances are people aren't going to stop getting knee surgeries and things like that because of that, right? I just thought that would hold up a little bit. It hasn't been bad, don't get me wrong, but I just assumed we would have a little bit better, like, because you saw utilities, right? The classic, hey, we're scared of everything, so we're going to buy Utes. You saw that actually happen, right? Some of those stocks were up during that period of time, and the performance recently has been very, very good. Healthcare just hasn't participated in that manner, and especially things like that have already been relatively cheap. Just haven't been able to get that, on either side, right? When it was go-go markets, they were underperforming. And then even in the turnover markets, it's not like they were superstars. So that whole sector has been a little bit confusing to me. It just seems like, I don't know if there's different dynamics or people are just a little skittish there, but that seems to be like a sector where it should be shining in this type of environment. It didn't.
You think it'd be election year worries?
Pricing, all that fun stuff. Yeah, could be.
That, and I think everybody's just buying Eli Lilly for their
exactly
weight loss drugs.
GLP-1 call it a day.
Novo
missed.
Yeah, they did, but it seems like obviously Eli Lilly hasn't. Right?
Lilly said, "What problems are you having? We're certainly not."
They were supposed to do like 2.4 or 2.3 million in sales this quarter, and they did 3 billion. So it's like that's a big upside in their weight loss drug.
Yeah,
that's a quarter, by the way. That's not for the year, so it's like 3 billion a quarter. That's not a bad run rate from a product that wasn't
just
just a
started.
few years
Yeah.
ago, right?
Especially since, yeah, I mean, the insurance coverage proliferation is very small still at this
Small.
point
Wait
right
till that
now.
gets-
So yeah, you're right.
Then
Yeah.
your price point will probably change.
You're probably, it
assume.
has to,
Yeah.
right? But even then, it's like, the amount of people that are probably wanting to do it versus actually doing it. I mean,
For sure.
that number could be, I mean, and that's why the stock has gone from a 20 multiple to a 50 multiple, right? Is that the addressable market is there for them. The question I have is the biggest question on that one is it going to be in time for other people to get involved before that really comes to
Yeah.
fruition? That total addressable market ends up being
Wasn't
7 drugs instead of 2.
Isn't Pfizer coming out with theirs soon?
Yeah,
They're a little
farther
further down the road.
behind.
Amgen's
Amgen,
right
yeah,
there.
that's-
Amgen's knocking on the door. We'll see how that one ends up looking. But there's a lot of different iterations now. People are trying to do pills and
Yeah.
longer times before taking the shot.
1 month pill
Exactly,
versus 2 week
so-
injection or 1 week injection or
Yeah. So we'll see what happens there. But yeah, I think, outside of that, nothing in healthcare has
No,
been
nothing.
great at all. And
Yep.
it's honestly surprised me. All right, let's pivot here a little bit. I want to nerd out for a second because, we've talked about risk of the market and all the other fun stuff. And one of the things we talk about when we talk about it is volatility measurements and VIX. So Tyler, I'm going to give you the floor here. The fun argument of telling us what is the VIX. Can you explain it in very simple terms in a few sentences?
Well, you hear often people refer to it as the fear gauge.
Yep.
So it's the VIX itself is 30-day options on market volatility, basically. So the higher the price fluctuation, typically, the higher the level of the VIX.
Got it.
is. So it's just a measure of how significantly prices change and how much fear
right?
is built into the market.
Yeah, because volatility, VIX doesn't tend to spike on upward trends, right?
No.
It usually spikes when things are happening
Yes.
like we experienced this last week where we had 8% decline pretty quickly. Volatility spiked as a result of that. And so that's why the VIX is kind of considered a fear gauge index. And it's one of the things we look at and saying, what is the magnitude of this? Is this an orderly sell-off or a disorderly sell-off where everybody's just hair's on fire? The old meme of everything's fine as everything's burning in the background. You saw a pretty interesting chart.
I gotta clarify this. It's like,
hold up here.
Oh, is this
Hold up
Tyler?
here.
Oh,
This
did I
is-
give the wrong?
This is
no,
my chart
I
here.
sent it to you, but Tyler sent it to me.
Oh.
Which Tyler and I are on the same email chain
Yeah.
that we got this from. So let's
Notice
just
how they're
clarify it.
excluding me from said
He
email.
would've-
Yeah,
He would have
Pretty
found
much.
it eventually, I think, but I
Okay.
just beat him to the punch on
Yeah.
it.
Gotcha. Okay, so Tyler gets his credit.
Yeah.
You can put that next to your participation
Yes.
trophy for the
Yeah.
pickleball. But
Oh,
Keith, can you?
fantastic.
I'm going to let you even just
Explain
explain
my
it
chart,
and
please.
explain the chart
Yeah.
that Tyler gave you.
So obviously, like we said, the VIX measures the fear index, and lately the VIX has been around that 15 to 20. It's actually been around 12, 13 in the last
Yeah, it's been
couple of
crazy low.
months. Which is historically low, right?
Very low.
And so on Monday, the situation, whether it was the jobs and the Japan situation, the VIX actually spiked up in the morning to 65.
Yeah.
Literally from like 14, 15, it was up to 65. Now, if we go back into time, like the pandemic, for example, the highest the VIX got was like 82.
Yep.
And so here we had a weak job number, maybe something going on in Japan, and we spiked to 65. I thought it was just
Nearly
hilarious.
pandemic
The great
levels, yeah.
financial crisis, the world almost ending.
Yeah.
Same with the pandemic almost ending. Again, that was like in the high 70s. So that's why in long-term capital, when that blew up, I think we were in the 40s.
Yeah.
We surpassed all that. .com was in the 40s. So I was like, oh my God, what's going on with
Well,
the VIX that
and-
you're spiking that high
And I
on?
think 3 standard deviations for the VIX is like 42 or something.
Yeah. So you
like-
were,
Like typically what the rule of thumb for a lot of people is if the VIX goes above or hits 40,
40.
that's a big buying
that's a
time.
buy. Yeah,
Yeah.
exactly. That's
40
usually
is
what you want
usually
to.
what we
And so
look
the
for.
fact that one data point from a jobs number, and it could just be a one-time thing, right?
Right.
If we get a good jobs number for August, that we blew out above 3 standard deviations.
Yeah, I think it was more the Japan. So I'd say those
I think it was
two
the
in
Japan
combined,
trade.
because that
Yeah,
was
yeah.
Friday morning, and this was actually
That's true.
Monday
It was
morning.
Monday.
That
Yeah,
huge spike
right.
up. But that being said, it's like, so what do? We actually look through our names that we own and decide, should we buy any more? But it's such a quick opportunity. You got to be like ready to buy, unless you're daily active.
We're not
we-
daily traders.
we're not daily
Yeah.
traders, right? We trade our portfolio. We're long-term investors with companies. But if something's on sale, like there were names, those mega cap names that we
Yeah.
talked about that I like, and that some are overvalued. There's some were down 10%. There's an opportunity for you to step in and add some of those names if you like them. And there's plenty of names that were
Yeah.
down. And by the end of the day, they were.
But it was so quick.
It was so
It was
quick.
so
by the end
fast.
of the day, you're
The-
still down, but
you missed a big opportunity.
Yeah.
If you put tickets in the morning, that was a great trade.
Yeah.
And then Tyler and I were also looking at how do you play it? How do you go like either short that index or go along the opposite, right? There's no true way there was no ET. There's
no
nothing.
good way.
There's no good
There's
way.
no good way.
Doing
Yeah,
it.
there's no clean
I
way.
I did buy a short VIX ETF. Tell you what, did not trade like it was supposed to.
I told Tyler he's buying like I don't know.
See, that's the hubris of the young over
Yeah.
there. It's like you got to learn those painful
Oh,
lessons
yeah.
sometimes. You got to take a punch in the
I was
face
like,
once
let's
in a while.
go. Oh, we were sitting at 65. I was like, this is perfect.
Yeah, it's like how can I make money on this? Right, we're at 4, 5, 9 standard deviations away.
Oh,
I
never
think
works out
I
quite
ended,
like you
I
planned.
think I ended flat on it, even though the VIX went down throughout the rest of the day.
Yeah.
I put in a stop position on it because I was like, I don't want to lose too much money on this thing. So basically,
Yeah,
flat
the
on it
young.
for the-
Yes, exactly right. So volatility, obviously, we tend to think about that stocks, right? Well, the bond market does have a volatility measurement too, called the MOVE index. Now, most people don't pay attention to the MOVE index because the MOVE doesn't really move. It shouldn't be doesn't move index because it usually doesn't move a whole heck of a
No.
lot. But what we have seen and what we've been talking about is the interest rate expectations and the changes in interest rates. Just to us, especially you and I, the gray hairs on the
Yeah.
table, have
Or
just
no, or
felt-
no hairs.
yeah, exactly. have felt so abnormal, like up 480, down to 380, and just kind of ratcheting around all over the place. And so I tried to use the MOVE index, and I was like, you know what? I'm going to look at this thing because I rarely do. It's not like I'm ever going to trade on a MOVE index. I'm certainly not going to buy a short move. But I wanted to look at, yeah, exactly. So looking like 10, 15, or I don't remember how far it goes back, but it goes back quite a ways. And the volatility that we're experiencing since 2022 is basically at levels that we only experienced in like 2008 and 2020. It's just crazy. Like the average median right now of volatility in the bond market is just as high as when we have our hair on fire, which again, from an economic conditions and economic point of view, should not be the case, right? Is that generally we've been in a growing economy. There hasn't been a real, what I would call fear of collapse, certainly now nowhere to the extent of
Global
2008 and 2020, right? But yet our bond volatility is moving much more. I'll be interested. I'll give my theory and you guys tell me if I'm just totally wrong, is that I think we've gone the fastest up that we ever went, right? The Fed funds rate went from 0 to 5% faster than any time in history. I think people just aren't used to that and are saying like, oh, now it's time to, it's going back down, it's going back up, it's going back down. They're just playing those levels much more aggressively than they have historically because of that change in environment that happens so fast. Is that accurate, or is there something else I'm missing that's going on in there that why bond volatility has been more than any time basically in history outside of collapses?
I think my take is that part of it is COVID broke stuff.
Okay.
Number one.
Yep.
And we also have more computer-based or algorithm-based trading models that are not necessarily being used by humans.
Okay.
Right? You set it up and you
Just
just let it go.
Yep.
Right.
Yep.
And so all of a sudden you have a downturn in some part of the market and it just sends shockwaves through everything else and forces these algorithm-based trading models to go start selling this thing and buying this thing and pushing prices up and down in different markets. And I think we have a lot more algorithm-based trading models than we have in the past. And I think that's part of the reason why everything is happening so quickly. Like Monday, if you had just been a rational investor, right, and thought, okay, sure, the Bank of Japan is raising 25 basis points or whatever. I think it's 10 basis points, something like that. or they were planning to, but they came back out yesterday and said, "Oh no,
put the
we're all
kibosh
good.
on that real quick.
We're not
didn't
doing it."
Just kidding.
Which is why we're having
bad,
a good
y'all.
market today. But I just think that any commentary from any public head is just sending these models
algos
crazy.
into and they'll push it. They'll push it more aggressively.
Yeah,
interesting.
Yeah, I agree with the algo stuff because it's if you look at the probability of the Fed cutting, back to that conversation, which is a big driver of the overall market. The probability on that on Monday when all of a sudden stuff was kind of going, the VIX went up to 64. Probability that we get 50 basis point cuts was it's like 95%.
Yeah.
And now a couple days later,
50 at the next meeting.
At the next meeting, 50 basis points at the next meeting,
Right.
which before you go back a couple months, people were not expecting anything. And all of a sudden we're at a quarter and all of a sudden, boom, we get a little volatility. We're at 50 basis points. Then you had people on Monday panicking saying, oh, the Fed's got to come out intra period and do a special cut, which is, I find this kind of crazy. And now I looked at the probability this afternoon before we came up here is 50-50, right? It's 50 for a quarter basis point and 50 basis points for the other half. So it's like, that's a little more rational.
Right.
So, but I think it's just people like, boom, algo hits. It's 100%. We're going to do 50 basis point cuts and things got in. Also the 10-year treasury yield went to 366 from over 4. I mean, these are 10% moves in bond markets. In the old days when you and I, it's like you get 2 or 3 basis point moves a day, not 10%.
I mean, we had to wake those boys up, right? Half the time, like
get them off the racquetball court or something.
Hey guys, the market's moving a little bit. Oh, well, I think then if that is the case, then we probably should expect a little bit greater volatility going forward than we experienced in the past. All right. Good to know. All right. I'm going to switch it up here and let's have some fun. The Olympics are kind of coming to an end, right? So I want to talk about normal Olympics.
Yeah.
I want to talk about, give me some categories. What I came up with 2. I want you all to come up with a couple here. Is like, what is a normal person Olympics going to look like? And I think my first round draft pick was bags or cornhole, whatever you want to call it.
Yeah.
I feel like everybody is an Olympic, feels like they're an Olympic, they're in Olympic shape for that thing. Right. And the other one for me, and this one's a little more rando, is I think bocce, right? Is that you throw a ball out there and everyone can play.
Is bocce not in the Olympics?
I don't know. It's certain. I didn't see
it. I didn't see it.
See it.
So when I was sick, I watched more Olympics than I think I've ever watched in the prior 16 years because that's really all I could do is sit there and watch. I watched more fencing than should be allowed because I still don't understand the rule. It was on all the time, dude. They hand out like 38 medals, I swear, in fencing, and I don't know what they're doing any differently. So I was all thrown off by that. But those are the 2 I came up with. Gangl, what do you got?
We could go with pickleball. We know Tyler wouldn't make the team, so we'll do that one.
I'll blame my partner.
So, another oddball one, which maybe I saw my daughters are in college, and since Olympic stuff was going on, they were gone for the weekend, which I've seen other college kids do is, they got a thing called beer darts. We're in the backyard where you're throwing darts at a beer can.
At a beer can.
Yeah. So, and then I don't know what they do after that. I don't want to know. But point being is, I think a sharp object like a dart, maybe at some kind of target in your backyard. It doesn't have to be a beer can. Maybe just a target or something like that.
Lawn darts.
Like a lawn darts, kind of something like that. How about jarts? Maybe, huh?
Jarts.
Yeah.
I could be down for some jarts.
Yeah, those are my 2 sports.
What do you got, Tyler?
I would do ladder golf.
Okay.
Oh, that's just
that's easy, man.
It's a solid pull. Yeah.
And then I have to go with a beer pong.
Oh,
yeah.
Okay.
Oh, there. That's kind of the same theme, right? Yeah.
So you guys are just playing the drunk Olympics.
Yeah,
that's
pretty much.
Or you could do if you want to do like a relay style, you could do flip cup relay.
Oh wow!
Oh,
really damn fancy.
Yeah, that sounds like I'd have to sweat, which I'm not involved.
We're out on that.
I got an idea for you. What do you think of this one? A putting contest. Like you get some funky greens, like they're greens, but they got like hills and stuff like that. Would you guys watch that? I totally would.
What's the Steph Curry show?
Does he have one? Am I late on this?
No,
Am I not? Should I be watching putting?
Steph Curry had a show not too long ago. I don't know if it's still on. I'll have to think of the
name. He's
name.
Advertising a new show now. It's throwbacks or something like that. Is that the one?
But it was a mini putt contest basically with like these crazy holes.
Jeremy missed it.
The idea's already gone.
I'm surprised being the TV connoisseur,
NBA guy. Yeah, exactly.
Especially it being Steph Curry.
That's not him shooting a ball in the NBA. That's him. That's his side. I don't watch side hustles.
All right.
Some of the holes he comes in as like a pinch hitter to chip a ball from some distance to see if you can get it closer to the pin
Oh,
for them.
okay. See, I'm going to have to check this out because
Yeah.
I would watch like a putt. Because if somebody hit like a
the
crazy,
name?
like 60-foot putt, I'd go crazy. I think that's
That's good.
awesome
Yeah.
looking. Like, yeah, so I'd watch it.
All right.
All right. Last question.
Holy moly.
Holy moly.
All
Oh,
right,
all right. I got to
look it
check out
Yeah.
holy moly. All right. Last question. It's a quick word answer. So 2 words. What real Olympic event do you think you could do versus what would kill you to do?
I'll give you my kill you is the steeplechase. I
Oh,
don't know if you guys saw that the other day. The guy got tripped on a
would be
thing,
right on my, yeah.
and then he get ran over. See, I'd be getting lapped. I wouldn't be in front to get pounced on, but
Yeah.
I'd be the guy tripping over and just people stomping on me. So that's how I'd die. And then the other one I would think I'd do fantastically actually would be is badminton.
Oh,
My son and I were sitting around watching it.
yeah.
And it was like, I said I could kill it. I was giving these guys tips. I'm like, the guy's got bad form. And he's like, really? You've been watching it for 5 minutes? Now you're the expert? And I'm like, yeah, I think I could do that. So that's my 2 sports.
That's an interesting pull. I'd love to see you just get murdered in that sport.
Wouldn't even move my
Yeah, just fling right by your head. Tyler, what do you got?
I'm gonna go. What would kill me? I would say the long distance swim, so 1,500-meter swim.
Okay,
I would,
I would
brutal.
drown. Yes,
that
absolutely.
would be
would drown.
so bad.
Yeah.
What could I do well? I would say this is a hard one because I wouldn't be very good at a lot of Summer Olympics.
Okay.
Winter would be better for me, but
How about a pole vaulter?
Oh, there you
here's
go.
how short I am.
No, don't. That doesn't matter. Fling yourself right over that.
Yeah, exactly. You're lighter. You just fly straight in the air.
I would go with the anything shooting accuracy.
Oh,
I'd go
okay.
with.
He's a dead eye over
Yeah.
there.
There we go. Oh, how about that one guy with the guy from Turkey?
Turkey guy. That's what popped in my head.
How about you, Jeremy?
All right. So what could I do? I that little ribbon thing. I could jump around and do that.
Wow, no one wants to see that.
Oh, that would be phenomenal. I'd be so good at it. I would not.
Oh, wow.
Actually, I'm going to go with cricket because cricket's going to be in 2028. So I'm going to go with cricket.
Oh, there you go.
Cricket in 2028. There you go.
Soon to be.
What would kill me is probably every other event. I think the one that would legitimately kill me the fastest is like the Olympic lifts. Some of the Olympic lifts, the
Oh,
more
yeah.
compound lifts, I would die. I would literally die from that. So yeah, I would be dead there. No question about it. Tyler, you'd probably be okay there.
I'd probably be fine.
You can do some compound lifts. I do
Yeah.
one of those. My back just falls apart.
Those guys lift a lot of weight, though.
Yeah, I'd go straight into traction for that one.
That'd be bad.
All right, boys, let's wrap it up there. Thank you very much. And tune in if you like us, like and subscribe. And until then, let's do it again next time. Take care.